It's showtime. It's Friday, and hello, everybody. I hope everybody's doing good. I completely forgot to tweet this out today. Anyway, today's story is called Bottom Talk. And we'll also talk about some wild predictions, which may seem wild when you look at the numbers, but when you calculate the CAGRs, they're not that wild at all. So let's get into what's going on. Thank you all, everybody, for being here. First of all, Bottom Talk, not financial advice ever. And a big thank you to Share the Day, several years long female follower here and proud Patreon member. Thanks for being here. Share the Day. Appreciate you. Now, let's first of all look at the year-to-date ETF flows. They are slightly positive year-to-date. We started off with a bang the first 2 days, and then the last 3 days sucked. Now, remember, we still have Friday to account for today. Fridays typically are strong, so that could turn the balance a little bit better. GQ Trader, thank you for being here. Either way, we have to watch this carefully. It's very important, but we will come to some other buyers or potential buyers in 2026 that will make for a big difference. First of all, Fidelity. Fidelity is a top asset manager in the United States. And they talked about how they believe there will be more sovereigns to buy Bitcoin in 2026. This is from a guy called Cooper, who is their Vice President of Research, Fidelity Digital Assets. He believes more countries will adopt Bitcoin as part of their foreign exchange reserves. And then this will pressure other countries to do so. And after that, you get the dominoes falling. By the way, it's interesting because you also see the news that Christine Lagarde from the European Central Bank does not want any part of this at all. But if nation states do, ultimately, you don't want to be last. Sometimes you take a lot of courage to be first, like El Salvador, but you definitely don't want to be last. AR1 Ron, thank you for being here. So that's the first bit of crazy news. Second, we have this fellow, Byron. I can't remember his last name, Byron Donald or something. He bought $100,000 worth of Bitcoin. And the reason this matters is he is on the Financial Services Subcommittee on Digital Assets. Why would he all of a sudden buy $100,000 in Bitcoin? Maybe he knows what's coming, perhaps, allegedly, And again, it's his first ever buy of Bitcoin. 100 grand is a lot of money. And he got a good deal too, because I think it was around 90K at that price. So either way, interesting to watch. Now, another good chart here from, this is from Quentin Francois, which is a nice chart. And what he basically says here is this is what bottoms look like. It's the long and short-term holder supply in profit loss 7-day moving average. And let me try to walk through this. The green circles, they highlight past bottoms where the pattern looked similar. This chart goes all the way back to 2017, so a couple of bull runs are in there. Now, in the past, typically when you get to the bottom, there's lots of coins in loss, especially for short-term holders. And the green arrows point to tops with the opposite, tons of profit, not in loss. And basically, Quentin is saying that the current situation matches all of the historic circled bottoms, not the tops. In simple terms, this dip looks like a shakeout where weekends have sold cheap. And it's a classic setup for the price to recover and go higher if history repeats. And he believes we are definitely not at the end of the bull cycle. He's basically calling it a buying opportunity and definitely not a top, which is interesting. And I could point to 30 other charts that say this as well. But more, this is another chart that says something similar, but in a different way, from James Easton in the UK. Hello, everybody in the UK. Hello, Sean D. He believes we are far closer to the bottom than to the top, and it's the easiest opportunity in history. So if you imagine these colors here, low purple, we're at the bottom of the range. And again, this chart goes back to 2013. We've had 5 bottom of the ranges from this power law chart. So we'll see. This is the power law regression line, by the way, and the deviations from it. We'll see if that holds. Anyway, would it be a good time to buy the dip? Well, let's ask Byron. Byron, did you buy the dip? He sure did. And he's works for the government on the Digital Assets Committee. Anyway, moving on. Another view of how, I've shared tons of charts about Bitcoin versus gold and Bitcoin versus silver and Bitcoin versus M2, et cetera, et cetera. This one is Bitcoin versus the S&P 500. Basically, we are also at all-time lows, which tells some people, is from Cryptolica, that we are also oversold in Bitcoin when you compare it against another index like the S&P 500. So what this typically would tell people historically, if you were in, say, the S&P 500 ETF and you were looking at this chart, you would rotate out of the S&P 500 and into Bitcoin. That's basically a rotation chart. Everything is a pair in this world. Remember that. Also, another piece of maybe not perfect news, but this is from Dan Gambarello. This is the ISM Services PMI. Now, we've been talking about the PMI for manufacturing. When the PMI for manufacturing goes above 50, it triggers a bull market in Bitcoin. This is not manufacturing, but it is services, and it completely smashed expectations coming in at 54.4. And this is the strongest read we've had in about a year, which is good news. Again, it's not manufacturing, it is services. And there is also a loose correlation between the services PMI. It doesn't have the same strength of correlation, and it is very consumer focused, but it is something nonetheless. Maybe services leads manufacturing. I think manufacturing leads services, to be honest, but we'll see. Sometimes things pop in different times. Anyway, another view of the world for Bitcoin on this Friday is from APSK 32. And when you look at these historic drawdowns, what do you see? Well, there's no big drawdowns, just a little bit of yellow. And also the colors dictate not just the depth of drawdown, and you can see we've got nowhere near what it used to be like in the past, but also the duration of the drawdowns is also a lot shorter. We're talking 1 to 2 months, not like in the past where the drawdown could last a lot longer. So either way, this is interesting, and we'll see where we go from here. But because of the perpetual bid from things like ETFs, maybe some treasuries, and the fact that the long-term holders have stopped selling, this bodes well for the Bitcoin price, I believe. Now, another piece of, let's call it hopium from Axel. And Axel has been quite bearish of late, but he did say, for the first time since November of last year, investor sentiment has turned to the neutral zone, which means there's no more fear. And this could shift to sustained optimism. So if you look at the line, the yellow line, that's basically the shift from fear to optimism. And typically when we go above this line, we go a lot higher. Again, just the sentiment here, nothing more, but sentiment often also drives price. Now let's get into some crazy future predictions. One, this is from Matthew Sigel from VanEck. He believes the Bitcoin price could hit 53 million by the year 2050. And I can hear you all groan and scratch your heads. Oh my God, that's physically impossible. But I'll show you how it isn't actually in a minute. But he believes this scenario does require Bitcoin to achieve parity with or surpass gold as a primary global reserve asset, which would also constitute nearly 30% of world financial assets. Could we get there? I don't know. But when I see these price predictions out so far, like we're talking nearly 25 years, I immediately go to my CAGR calculator. And this is from the Retire On model. And you can actually use it to calculate all sorts of things, including CAGRs. But here, when I punch in the numbers, what does it take to take the price of Bitcoin today, which was 91,379, and to get to 53 million by the year 2050? Well, the CAGR would be exactly 28.8% per year. Interesting. That's not that high when you consider the historical average CAGR for Tesla since inception, since the IPO, is 49%. A CAGR of 28.8% is not beyond the realm of possibility. But remember this as well. We're going into potentially an abundant future. If everything is abundant, some people believe we don't even need money. I don't know if that's the case at all. And if energy is the bottleneck And the price of Bitcoin is a function of energy. That also bodes well. But at the same time, in the year 2050, an apple could cost $1 million. So bear that in mind as well. Let's move on. Another target here. This is from, let me get this right. Polymarket. Will Bitcoin hit 80,000 or 100K first? Probably the dullest prediction market I have seen. And there's also sometimes there's fake predictions out there, so be careful of stuff. But here you can see that will we hit 100K or 80K first? Nobody cares. 51% chance it's 81K first, and the price of Bitcoin is basically pretty much at 90K. So we're in the middle of the road, and so are the odds. 80, 100, it's a coin toss from this particular chart as well. Another chart too is just, I thought I'd interject here, even though it's a Bitcoin show, Bitcoin is digital gold, and a lot of people now are trying to wager what are the odds of either gold or Ethereum hitting 5,000 first. And the odds are squarely in the favor of gold. Gold is very close to $5,000. I think it's around 4,500 last time I checked. Ethereum is a little lower, and it would need to move a lot faster. But again, crypto can move fast, but that's an interesting one to think of. Which is the faster horse? We know gold has been on fire for the last 18 months. And another prediction from Galaxy Digital, they basically, like a lot of people, like VanEck and others, they didn't do 2026 predictions like I did. And they're also not doing 2020 predictions for Bitcoin price. They said 2026 is too chaotic to predict. However, they were very confident in predicting a $270,000 Bitcoin by the end of 2027. That is interesting. And that is a 3x from where we are today. Wouldn't that be nice, my friends? And that's only 2 years away. We'll see who's right and what happens. But as if VanEck or Fidelity, as they say, if nation states are going to buy, that could trigger a big gold rush. So be patient. Sometimes it's good to just be in position. And when we look at this target, by the way, this CAGR of 28.8% out to 53 million, what this basically tells you is the risk of not having exposure far exceeds the risk of taking a flyer on Bitcoin. That's the big message here, that you all need to calculate your own expected values. Now, finally, on this Friday, meme du jour, 2 seconds after crypto, wear a Lambo. I thought that was very funny. People expected to make them rich instantly, and that certainly didn't happen last year at all, by no stretch. Anyway, people want a real estate video. Let's see. Yeah, I do it globally. It's a big dig, but yeah, I actually have one started. I just didn't finish it, and I'll do around the world loop of all the top countries where the audience is from: Australia, Germany, etc. But there are some big changes happening in real estate, Oscar, too, including as rates go down, real estate goes up. I'll show you the math behind that as well. Quite exciting. So yeah, I'll do a real estate video. And with that, thank you, GQ Trader, AR Ron, B-Man, GQ Trader again. Thank you. And the mods in chat, Sean D, T&D, and K8. Appreciate you all. Have a great Friday and take care this weekend. Bye-bye.